Good morning, good morning, good morning, all. Good morning, Stel.
Hello, how are you?
Yeah, very well, thank you. And yourself?
Not too bad. Full summer today.
Nice day out
That
with
was
the family yesterday.
yes, first swim of the year. It was excellent, really good.
Great stuff.
How are you?
Yeah, all good, mate. Trying to recover after my week and a half off. I feel I'm still catching up actually on
You,
everything that happened, but
you need a holiday from a holiday.
I think so. I need a bit of still recharging the batteries.
Yeah,
Uh,
yeah.
Alrighty, let's see what happened overnight. First of all, as usual, we'll go from east to west. Happening in Asia. First of all, is that there's a lot to do about the Chinese interest rates. RRR expectations are for more cuts in the second. Well, for cuts actually in the second half interest rates, and then. An hour or so ago, there was some news out that China was asking their major banks to start cutting interest rates for loans to help to support the economy. At that time, the dollar was actually on the defensive. Dollar China was coming off a little bit from 7.12 to 7.11, and then since then we jumped again to 7.13. So the market is still has a firm view and a firm grip on the CNH, thinking that the economy is still not where it should be, and it's all reflected as well in some of the commodity prices, oil coming off as well, and that's not supportive for the CNH. We'll talk about that, about the prices in a bit. In the meantime, the US and Chinese foreign ministries have met, and they both very diplomatically called the talks candid and constructive. But at the same time, if we look at the other side of geopolitics, there was a bit of stress with one of the American boats crossing the Taiwan Strait. So everything needs to be taken with the usual kilos of salt. But anyway, they are talking, and that may be somewhere in the distant future a positive for now. But then yeah, the interest rate thing is still weighing firmly on the CNH. Dollar CNH is now staying above 7.10 in the meantime. Then more down south, the RBA surprisingly hiked 25 BPs. I said it was a possibility. I actually didn't trade it with cash differently, but I said that if ever they would be very mellow. I did buy a very small 1 week downside in the Aussie, but that's probably going to go in the bin very soon. Looking at where the Aussie dollar is trading, and Lowe also said that they may be forced to hike even more. So again, it's a total weather vane situation. One meeting, they say that it may be close to an end, and then the next meeting they're coming out all guns blazing again and taking the interest rates above 4% now in Australia. It did send the Aussie dollar spiking versus dollar mainly, but then really versus everything, barring perhaps the yen too much. But we'll look at the yen in a bit. So yeah, we were talking about that yesterday. We were wondering what was going to happen. The market was actually thinking they would not hike, but then in the end they did. Stelios, what do we make of this?
Oh, yeah. I mean, the RBA and the RBNZ are kind of going towards different directions at the moment, but you did say it, that it was a possibility. I didn't expect it, to be honest. What was the market pricing before? Do you remember, in terms of
I think
probabilities?
70-30 or 75-25 for a standstill.
Yeah, exactly. So it was more probable for them to not to stay on hold. So what do I make of this? I don't know. I mean, It's difficult to say, but I think I'm going to revert back to what I've been saying for the past days and weeks. As long as the Fed is grinding to a halt, I think they all will. So, yes, they hiked this time, but I think, look at the market reaction. It's not really, the Aussie is not galloping away. Yes, it's up today, but it's not doing anything crazy, which shows you that maybe, they did hike this time, but that just means that whatever we're pricing in the future, that gets all pushed forward to, or most of it gets pushed forward to yesterday's hike, basically. So I think dovish hike, and for me, the general direction will be that central banks go on hold now, pretty much. Maybe not all of them straight away, but the ECB, the UK, the Bank of England, being obviously the ones that have a little bit more to do. But I think we're getting really close now.
Yeah, I like Sue's comment saying that we are not impressed here in Australia with Lowe. Tell you what, nobody is, but if you're here in the UK and you have to deal with Bailey, then you know what a real bad central banker is. Yeah, I understand what you're saying, Sue, and I don't prove you wrong there. This is they are acting like weather vanes, and I think they're more like situation followers than anticipators, right? But that's, as we discussed yesterday already, I think it's going to be the case for whatever central bank meeting we have coming up. There's going to be cases for standing still. There's going to be some cases for doing extra hikes, but we see inflation data coming off. So it's going to be a flip the coin, most of those meetings, right? We spoke about it yesterday as well. I don't know if you were with us then, Sue, but it is really going to be a flip the coin. And I personally think that the central bankers do not know before taking the decision themselves what there is to do, because they need to really, as they said over the past meetings, they are data dependent, right? And so we can have plenty of opinions, but we can only trade what there is in front of us. The interesting thing, though, that we have seen over the past meetings is that two things. Not all interest rate hikes are equal. That's one thing, and the market is still thinking that they might be over hiking, or we might, as Stelios also already mentioned very often, being close to the end. And what happens very often is that we have this 24, 48 hours impact on the currency, and then it's starting to wane. So it's going to be interesting on the Aussie dollar. And we are actually already, even though 67 is going to be a bigger level, we'll have a look at that later, but we are already trying to figure out if it can stay above 66.60 or not on the Aussie dollar. Right, that's enough for that. Closer to home, we had actually talking quickly about oil. It seems that the Saudis are a bit on their own there with what they are planning to do, the 1 million barrels extra cut in starting in July. Because I've seen reports overnight that actually the Russian oil, the Russians have also said that they would cut oil, are actually, their output has increased by about 20% over since the start of the year. So there's no real surprise there. The Russians, we can't trust much of what they say. But even inside the OPEC Plus, there seems to be a bit of a discord right now, and the people don't seem to be blindly following the Saudis anymore. Other countries are much more reluctant to follow to follow their lead right now. So we have to keep an eye on that. And actually, oil prices are reflecting it and are already coming back down. WTI is trading back below 71 bucks this morning. Let me just quickly show what the commodities are doing right now. If you look at the oils here, you see that we are already trading back below 71 bucks. And Brent as well, which shot up to $78, $79 yesterday, is also already losing its shine. And if you look at the commodities, they are turning red again. Of course, they're not helped with the situation in China and all those warnings that we get out of China over there. So keep an eye on that commodities space. It could influence the Aussie dollar as well. And then over to the European data. And we have to acknowledge that those German data have been. It shows a red one here, but I'm not sure if their expectations are completely correct on the page. But we did see that those factory orders, and globally the German data. This one is a bit higher than the prior one, but globally the European data are feeling a bit sluggish to me. And then on top of that, we had this morning the ECB's April consumer survey out, where the consumer inflation expectations actually dropped pretty sharply. So the 1 year expectation dropped from 5% to 4.1%, and the 3 years outlook dropped from 2.9 to 2.5%. Now, I don't exactly know which one the ECB is going to concentrate on more. If they concentrate on the 1 year, they can continue to hike. As Lagarde yesterday also said, they think that they're not yet there on inflation. They see no peak in the core inflation yet, despite the moderation. Nagel also said that the ECB may keep raising rates beyond the summer. And then Vujicic said that inflation risks are still tilted to the upside. And then we get today's report out where the inflation expectations are really coming down. We also had Not out overnight saying that he's one of the most hawkish ones. But he then started to say that they may need to wait, not pause. He didn't explicitly say pause, but he said need to look at the transmission of the hike. So a little scaling back from his ultra hawkish tone. So then back to Stelios. What is it about the euro right now? Is it are these inflation expectations coming off? Are the data weak enough to keep the euro under the cush, or are we just waiting for the ECB next week, waiting for the hike, and then see what is going to come out?
I think we have to wait for the hike. It's baked in, right? I mean, that's happening. But you very correctly said the numbers are turning, right? And PMIs and price. What worries me more than everything is that the price and inflation data has turned and is turning. You know, PPI and every prices paid on various ISMs and all that. They're really starting to look weak. And this is the reason why central banks had been hiking like crazy, because prices were going through the roof, not because of employment. Employment has been steadily, pretty consistently good. So I think that the data is now starting to turn enough. Look at PPI, Eurozone PPI, 1% year on year, expected 5.9 yesterday. So this is a big gap, and this will translate into a lot lower inflation eventually. It obviously has it doesn't happen from one day to the next or the 1 week to the next. It has a lag, but I think this is coming, and we know very well Lagarde, ECB, Bailey, the Bank of England, even Powell, who is probably the most hawkish central banker out of all those. They want to find reasons to stop and to stop the tightening, because they know that tightening will hurt the economy. It's economics 101. So what they want to do is they want to avoid an economic downturn while bringing inflation lower. That's what they want to do. And I think this data is now starting to give them good reason to pause. And, I've said this again, central bankers, they look at a 1 year or 2 year horizon. They try to gauge whether inflation is going to be at target within that horizon. Well, now they have good reason to say it's going to be there. I mean, there's I was reading, I think it was on Bloomberg, there was a piece saying that they're expecting a 3 handle on the US CPI now coming up. So that will be huge if that happens. And so that's why I think that we are close to a pause pretty much everywhere. And this data, especially with the price data showing weakness, it's all the central bankers want to see, really. I mean, that's what I think they have in their minds. Obviously, I can't know, I'm not them, but that's what I think they will be looking at.
I mean, really, I was not surprised by what Lagarde said, but I think she's very close to turning around again. She has to keep the same rhetoric, and we are going to go in their quiet period on Thursday. I think, if I'm not mistaken, they have 1 week, but I think she's very close on turning as well, and dropping her. She was late getting hawkish. Now she seems to be clinging on to it, but in heart and soul, she's not a hawk, and I personally think that she's pretty close on saying, okay, we are there where we want to be. Now we look at how the transmission is going to work, and then we'll see from here. I don't think she will be staying more hawkish for longer than it really needs. But yeah, so far she had to be. But I think possibly even next week she's going to announce a pause, or at least show us that she thinks we've done enough. That's
a dovish hike, I think, for sure it's going to be.
Yeah, something.
I agree with you.
The reason. And I was talking about it on in the chat room this morning as well, in the Flowonomics room, and I think if we get a spike, well, it's still very early because it's more than a week to go, but we are never prepared enough, right? But I think if we get a spike in euro on a hike, there may be a trade to do next week there, because I think personally, I think she hasn't shown it yet, but I think she's ready to turn, and she can do it on pretty quickly, right? Okay, just one thing. So let's look a little bit. What else do I have? Oh yeah, I need just an article that I was reading as well overnight, and but I'll save that for when we are really on the American continent. So let's have a quick look at what data came out. So starting, we're going to go a little bit backwards, right? So in Japan, and this is a bit of a surprising number, the overall wage income was a nominal rise, but the real wages, and also dragged down by the overtime pay, the real wages year on year have actually gone down by about 3%, where the market was expecting a slower, and that's not shown here, was expecting a slower setback. And it's a bit surprising, and we will have to monitor it very, very closely what's going to happen in May, because we know that the Bank of Japan, one of the big metrics for them to start changing monetary policy is the wages in Japan. And even though we had a bit of a nominal increase, it does not reflect the 3.8 or whatever percent that were negotiated. So we may have to wait for another month, like the May numbers, to really see that number come through. So where I thought that perhaps this time there would be a window for them announcing something, and as I've already said many times, I don't think it's going to go very fast, but they should be normalizing in a way this year. But those wages being a bit stubbornly low, also the household spending seeing an absolutely big drop here, it may hold them back from actually starting to really turn on the engines and normalize. But it's something that we'll have to see next week. Anyway, ahead of next week, I still expect the market, like we did last times, and especially after December, when Kuroda came in with a surprise. I do think that ahead of next week, it's the end of next week, that we will hear from the Bank of Japan as well. And I do think that perhaps the market will try to speculate a little bit on what may happen with Bank of Japan decisions and Ueda, what he has in his mind. And it could be that the yen is doing relatively well going into the meeting. So I'll have a look on the yen process if I have time today, but for sure later in the week, because the market always tries to anticipate. and there's a bit of there's a few moves going on in the yen crosses overnight and since yesterday. So what else did we have? We had the let me run quickly through. Yeah, that's the main one. So as I said, we had those factory orders coming down in Germany. But then we have to look at what happened yesterday on the PMIs, right? So we already said on the PMIs in Europe, even though it was still higher than the last month on the German PMIs, the French ones, and they're showing signs of slowing, right? As we already said. But then the big one was here when the ISM came out, and that really put the market thinking that the FOMC will likely remain on hold. Also, as Stel already said, if we really and that's just right the day before the FOMC, we're getting the next CPI set of data. If that really shows a slowdown, then probably the Fed will be on hold. So we saw relative setback on the dollar yesterday, but then as we've seen on the European data, the euro dollar didn't really enjoy much of it, or not for very long. Cable was a bit better, but the main one, barring the Aussie, that came off was the dollar yen. And if we see that numbers like these are coming off, we could have thought that risk would have been hit a little bit, which we see on the yen process. But then, if you have expectations in the main countries, the bigger economies, we've also seen that the carry trades were doing actually pretty okay. Because if you look at stuff like dollar mix, dollar rand, Euromex, Euro Rand, they have actually continued to come off. So the EM currencies were actually doing much better. So it's a very uneven risk scenario that we are living right now. So you can't purely trade risk on or risk off in this market. It's a little bit more complicated than that. So what do we make of this ISM then yesterday? A pretty big miss, right? I mean, compared to prior, the miss on the orders, it was a big miss. The miss could be said like, okay, we still have most of it above 50, but compared to expectations, it was a really big miss, right? Stel?
Absolutely, yeah, absolutely, and it's like we said on the chat room at the time, it was a sea of red, and this is the. I mean, again, I'm going to repeat. This is a kind of economic data that the Fed, well, does not really want to see, but really wants to see because they want to get on pause. And I will repeat it once more. The only strong, or let's say resilient part of the economy, in the US economy at least at the moment, is employment. And there are many reasons why people actually debate that. And because of the way the NFP number, for example, is calculated, and how, you know, people having 2 part-time jobs counts as 2 jobs, 2 people having jobs. You know, there's details which have not been changed since 1968 from what I read, and the employment picture has definitely changed since 1968. So, you know, you could argue that the numbers are not as good as they look, but even if they are, it's the only part that stays resilient, and everything else is really not looking good. So, you know, like you said, you know, the big miss yesterday, and you know, any way I slice it, I cannot see this being positive for the US or the dollar. That's why I really want to sell a rally in the dollar if it materializes. We'll talk about levels in a bit.
Yeah, and I don't know whether it's today or tomorrow, or do we have to wait for the combination of the central banks next week? But yeah, I think it's either you trade really short term and you try to accompany moves, as we're seeing now, like for instance the weekly yen process also, or the better carry trade thing, but it's still a case of remaining either very flexible if you are a short-term trader, or be very patient and wait for your levels to get hit, or to come very close if you want to do it on on a more longer term basis, for instance, it's
I am the latter, by the way.
yeah, exactly. I mean, you can argue that the euro dollar, for instance, could have a move into the 105s if you are a longer term trader, but already 106.40 is showing up. So I don't know, but those wider levels, and we've been talking about those things. This is a case of being patient, right? Or spotting the turn, even if it didn't reach your level, and then trying to catch the move once it's really starting. And then you pick your dollar, right? Then if you want to sell dollars, like for instance Stelios would like to do, then you pick your dollar, whether it be euro, dollar, yen, cable, Aussie, whatever, or you can choose, if the economic situation is not too bad, then you can choose stuff like silver, for instance, or you can choose oil, maybe a bit of a strange one, but there's different instruments to express your positions, right? If you want to have a position in a certain currency. Okay, then what's next on the docket for today? Very little. The IVPMI in Canada hasn't really moved much over the past months, so I'm not sure whether it's going to move much today either. Then next night, but it's still Q1, right? Is the final GDP in Aussie land, but get an undershoot of this, then we might be in that scenario where we've only traded the RBA for 24 hours and Aussie dollar loses its shine again. Get a confirmation of better data, then the Aussie is probably going to form a bit of a bottom somewhere, maybe a candidate to try and pick some up at some stage. We also have both Lowe and Bullock talking as well overnight. Trade balance in China coming up, and what else? We have like housing prices in the UK, and then we have the German industrial production. A bit earlier today, we had the Spanish industrial production, and that also showed a pretty decent decline there versus a big decline versus the prior numbers, and also versus expectations. That's not a really good number. So that's another one telling us that the data in Europe may be a bit sluggish right now. So that's it. The rest we can talk about it tomorrow, I guess. Let's move over to the prices. And while I'm changing screens, where is it? Whoops. While I'm changing screens, just a couple of other things. Talking about the Mexican peso a little while ago, read this article that Mexico is trying to pitch a few tax incentives aimed at luring companies into investing in a business corridor that would try to compete with the Panama Canal. So since the Mex has already been a favorite of the markets, if the Labrador is trying to get even more business into Mexico, that may be one more reason why the Mexican peso would remain underpinned. On the other side, being very lefty, he's also trying to not nationalize, but keep a very close control about all kinds of drilling and stuff, and that is a little bit on an issue for international companies trying to get new concessions and stuff. But in the meantime, he's still trying to lure more investors, and since the market already likes the Mexican peso, that should continue to see the Mexican peso underpinned. Yeah, so that for that. Okay, let's move over to the prices. I'm not charting this, and then yesterday it seems it came off again. Are you ordering your new headset? It's cheap, right?
But
3.5.
I didn't understand what it does. What does it do?
Is that important?
3.5 grand, man. Seriously, that's more expensive than anything I've ever bought in terms of computing or yeah.
Yeah, I thought it's just a case of just buy it and close your eyes because it's Apple.
Well, you saw the oh, is the stock coming down now? Okay, I saw they were making like new all-time highs and just going bananas over it.
Then we had a pretty big setback, right? But I think I'm still here at the close also yesterday, so I don't know where it's trading right now.
Yeah.
But anyway, okay.
Yeah.
Yields. Okay, this was the jump that we saw on the euro dollar as well. These are the 2-year differentials. Into next week ECB, I'm going to keep a very close eye on what's happening in this zone here. It's the 150 basis points to 145 basis points differential. So it's an inverted. If you look at it, I keep it inverted because if you overlay the euro dollar, that's exactly where you can see the moves coming from. But after this inflation report this morning out of the European consumers, the differential is widening a little bit, and if you look at the euro dollar, that's where your 20-30 point setback come from. Euro dollar, I can't see an awful lot really to do here, barring the fact that we're already capped around this 107.30-37 zone I was talking about yesterday. We tried it again in the early morning, and it's capped again. So I reckon this is your first zone of interest here, 107.30-40 if you trade it in the more short term. If you trade in the longer term, since we've broken below the channel, you will have to wait until 108. I think this line is going to creep up a bit too steeply to have too much of a say at one stage. I do think that the 108, figure 10, figure 15, is going to be a very, very decent point to watch in the euro dollar, and it could have to wait until the ECB actually, or ahead of the ECB to if we retest it, to show us what it really means, this 108. But to me, this is pretty decent already. On the other side, 106.40, as I said, 106.40 it is. It's also the 78.6 of this of the rally from 105 to close to 111. It's a decent level. And then we're looking at these levels here, right, around 105, 105.15 that we saw a while back. That's early Jan, and then here as well. It's going to be a psychological level as well. And if you are a long-term trader and you think that at some stage the dollar will have done enough, unless European data completely fall out a bit on their own, because now we're seeing that the US numbers are also showing weakness. So, but if all things equal, this is going to be a very, very big zone, in my opinion. And if you think that that is enough, then this may be a very decent area to try something for the more medium term. Could be. The jury is out, but it could be. And I think this is going to be very interesting if ever we get there. As I said, it may be already enough at 106.40. That for the euro dollar. I know a lot of people are watching this cable. I don't know. I'm a little surprised it's not a bit stronger than it is, and that it's really coming back down so easily. Also, if you look at the euro sterling,
by the way, sorry to interrupt. Yeah. It's exactly what I said yesterday on the Morning Edge about cable. I thought it was going to be trading a lot stronger, but it's showing some weakness now. So it's worrying me a little bit. I'll still think it's going to probably perform relatively well, and I like the pound for the rest of the year. But it's for the moment, it's not really convincing me. Sorry to interrupt. I just wanted to.
Yeah. No, it is not convincing, and And I also thought it would hold a little bit better than the euro. And as I said yesterday, yes, euro sterling came down while I was off and stuff, but the fact that it's so easily coming back down is I don't know, it's a bit worrying for people like me who think that sterling should do better. So yeah, I'll keep an eye on what's happening around here, 123.80, and then yeah, more in the 123s. Low 123, 122.90 should be a decent level, 122.60, as well. But in the meantime, it can't hold above 124.5, which is the first point of measurement. Below or above is still showing the accelerations that we see when we tackle it. That still tells me that the market is also watching what's happening at around 124.5. You hold, you accelerate. You don't hold, and it's losing 40-50 points quite quickly again. So I'm going to leave this one alone for the moment and just watch what's going on. And a little bit the same in the euro sterling. Bit of a strange picture here as well. It broken under this 86.10, and then we had this. We were talking about this zone yesterday in the mid 85s, which should be quite important as well. But then it came back 60-70 points quite easily, and now it hangs here. I tried a little short this morning, but then on the divergence of data, but then the market just doesn't trade it, so I just went out for virtually nothing and just looking at what's happening really. Yeah, so a bit neutral. To get back going topside, we should break back above 86.5, 86.65. That I think is going to be telling us, if you look at how it held before it gave way, that level here, perhaps more importantly than the trend line, because it's only 2 points and a relatively short term, that 86.60-65 I think is going to be a bit key if we get back above there. If we get back above, then it's probably going to try to get back into the 87s at least. But right now, my preference would still be for a retest of the lower levels. And then we have to look, since we're talking about those euro crosses, we have to look at some other euro crosses, right? Because there may be something going on there, and one of them is euro yen. Okay, there's a couple of things here. I had this trend line in which we broke this morning. Whether you put it here or you put it there, both of them gave way. And it looks a little bit fragile to me, and that's purely then based on data, the combination of data that we had out of the US putting pressure on the dollar yen, and then the sluggishness of the data out of the Eurozone is adding weight to this cross. And I wouldn't be surprised if we go for a test of this, what could be probably a head and shoulders, and 148.5, 50-60 could be tested on this in this round, I think. And then there we decide whether the yen has more strength or not, and that's going to be decided by this trend line. Yeah, I'm going to keep it on the daily. So we had this the break of this channel in the dollar yen, retest, jump, retest, hold, jump again into the 140s. But now yesterday we had those weaker US data as well, and dollar yen gave up the 140, and the support right now is around 138.70, 75 today. Keep a very close eye on what's happening around this trend line here, because it has shown it's important. Also, always give a few algo pips, 138.65, 75, call it. But that's going to be a relatively important level for me. And topside, I don't really see much myself before we get back closer to 139.5, perhaps 139, 50, 60 here, and then 140 again. It's probably going to be a bit psychological, although it's been crossed relatively easy. So 138.70.75, 139.5, that's 50.55, that's your level there. And that will have its importance for most of the yen pairs as well. If those dollar yields continue to be sluggish and we break through this 138.70.75, then your yen crosses will also come off. So I was looking at euro crosses, and look at this euro Aussie. Euro Aussie is on a relatively important level, around this 160, call it 160.5. That's a relatively important level. It's also 160.45-ish is also a prior low. So keep a close eye on what's happening here, especially after the RBA. And looking at the euro coming off, this thing could eventually see a little bit of a break, and why not have a move back to sub 160. The 38.2 of the whole leg higher since August last year is at 158.30, and that's also where this trend line, which was broken and then retested, and then we moved up that last leg higher. It's also where the trend line comes in. So keep an eye on where we close here on this euros. It could be quite important. Euro CAD, I already showed that one yesterday, and it's still, despite oil being lower, it's still not bouncing much, and whatever bounce we saw on the back of the lower oil has been already undone. I said yesterday 143.35. we are very close, very close. Also a low on yesterday. So watch out if we break here, because it's prior lows here as well. That could be your gateway for a retest of 142.40. Depending on what the oils are doing. The oils are not supportive for such a move, but euro data may be enough. And we also have Bank of Canada the day after tomorrow. So it's going to get very interesting. Oh, or tomorrow. Let me have a look. Yeah, it's tomorrow. Tomorrow, Bank of Canada, and then on Friday, the labor report. Canadian dollar will be on the move. We'll have a very close look at the Canadian dollar tomorrow then. Europe, Kiwi, no, not too much to see here. Have I looked at all those all the euro crosses? There's I need to give a special mention to this euro mix again. It's still very weak, and we also already broke through this support, and we are on the next support zones, spikes here. Back in 2014, ladies and gentlemen, we are trading at levels that we haven't seen since 2014. That is how strong carry trades can be if there is enough, on the one side, enough differential in the interest rates. And if you're talking about, as I've already said many times, if you're talking about a currency that is a close neighbor of the United States and one of the manufacturers of the United States, and attracting investors from all over the world, including even the Chinese, that's how strong carry trades can be and how strong that currency can be. One day it'll be enough. When? I really don't know. It may be when Banxico, which is very close, which is on a pause right now, when Banxico starts to turn, that may be when we see a bottom. But are you fighting 7 or 8% or 6% interest rate differentials for a US manufacturer? I'm not sure right here and now. So this thing could actually do another 1 or 2%. Why not? Yeah, down to here, 1820s. Why not? So that for the euro crosses. Is there anything else you would like to look at still?
There's been well, the main mover now, I mean, over yesterday has been cryptos, right? We need to have a look at that. But otherwise, we are in kind of wait and see mode for the Fed. and the ECB. And yes, we are getting some movement. We're getting a little bit of risk on, which we have to admit we have been warning people about for weeks. But overall, in the grand scheme of things, this is noise until we get the Fed telling us more explicitly what they're going to be doing. So they hike and then what? Or maybe they pause and then what? So because remember the chances of a hike this meeting had been quite a bit above 50%, and now it's I think 75-25 that they stay on hold. So we wait to see what they tell us in terms of how long this pause is going to last, if it is a pause or if it is a whatever the hell it is. So no, I think the only thing we need to see, I mean, apart from the stuff you've shown, is cryptos, because this is important. It's become a big market, and market cap is big now for crypto, so they influence things, and we are on a breakdown in Bitcoin, but we can have a look at it.
Unfortunately, I'm not charting those cryptos myself.
I can show if you want.
Yeah, but I've also seen that there's something going on with Binance, right? There were wash trading allegations.
Yes,
trading more tokens than there are in the market. Also, I see that CBOE has won an approval for margin trading on futures, so that should go paired with more regulations, and that the Japanese also said that they put tougher money laundering regulations in place for crypto trading. So there's a bit going on there in the crypto sphere as well. I'll pass it over to you in a sec. Just want to look at this one because I pulled it up today actually this morning, and saw this sterling. Could be adding to the uncertainty in the sterling is this, and Gavel just mentioned sterling Kiwi, the sterling Aussie broken down as well, and as you say, sterling Kiwi sitting on a swing high, being a bit of a level. Yeah, that's going to perhaps cap a little bit there as well. Oh yeah, I know RA that Binance is not Bitcoin itself. I know that. I was just saying that whenever you put more regulations or whenever you put stuff on in the crypto sphere, it's all one big pot of that, right? I would say. Over to you, Stel, if you want to grab it.
Give me 1 minute because I'm on a call. Just 1 minute, okay?
Yeah, sure, mate. Okay, while Stelios is doing this, I'm going to have a quick look at what's happening in the S&P, because it's coming off just a little bit. And if you look at that, we had a bit of a wedge going on here. For those who really traded very, very, very close to the market, we may be in for a little bit more of retracement here, providing that the market.
Sorry, I am back.
Yeah,
I'm
no
really
problem.
sorry. Oh, actually, they're calling me again. I can't believe it. Sorry, I have to take this. I'll be right back.
No
okay,
problem.
I'll be right back.
No problem. So I was talking about this S&P. Keep an eye on what's going on here around 42.75. We are just dipping below this little trend line here that I've drawn. So that may be an interesting one as well. And then, okay, let's have a quick look at gold and silver. I'm not really inclined to trade much of it right now because, as you see, we are in a bit of a range right now, and we are around the middle of this range. It's going to be very interesting what's happening around 1985, because it's now 1, 2, 3, 4 tries to get back above and failed. And equally, and that's a level where I've been talking about often in the past, we have this 1930s has always been showing up for some reason. So you get about $50 here, in which inside of it's neutral to me. Sorry, it's neutral to me. But if you're a short-term trader, I'm sure you can find some levels to trade inside of these. We need to get back. We need to get back through this 1985 to get going again. If in turn, okay, we had this quick washout here the other day, but if in turn you get back below 1930s, then a move down to 1920 will be the next level to watch this this trend line for gold. I'm relatively neutral on it, but if we see more weakness in the US data, and the yield continues to come off, well, just per correlation.
Okay, I am back. I'm really sorry. I just had to take
just per correlation, gold should come back a bit higher if those yields come off. Silver, a bit the same thing. I'm relatively neutral on it. This trend line is really getting watered down, even though it does tend to show up at times, but a bit neutral here as well. Really short term, and one could say like this, perhaps like this, and then your top end over here, 24, 23, 35, 30, 35. That's where we're at right now. Inside of this, I'm not planning to do much at all. I got a bit slower down in case we get a last washout to get longer again. And go ahead, Stel.
Yes, sorry, I apologize about that, but there's been some developments in our family, and I have to take care of stuff. Yeah. And by the way, I'm not going to be on the flow show tomorrow. We have a funeral.
No, okay.
My grandmother died, but anyway, 101 years old. I hope we all get to that age without ever stepping into a hospital. I mean, that was incredible. Anyway, okay, so Bitcoin, cryptos, of course, affected by Binance and the SEC's. Was it DOJ? No, the SEC is investigating, and apparently they're, it's quite serious, and we know how cryptos can be sensitive to this kind of headlines. And let's face it, we keep getting loads of these right over the past couple of years. You have FTX and you have all sorts of other stuff, and what was the name of the other? I can't remember. It's too many. But anyway, Bitcoin, I've been saying for a while. Upside break, this trend line was about 28K. Downside break, these two lows at 25.8. We are at 25.8. So, we actually did break below. We're, holding around there. This is crucial. If this breaks, then you have a kind of a minor support around 25.1. This is really close. But really, if this breaks, it's going to be technically bad, and not only technically, but also there's an underlying reason. There's an underlying kind of fundamental reason why cryptos are selling off, which is of course Binance. So in the absence of any actual news, this breakdown, I would be cautious. I would say, maybe it's going to be a small false breakdown. We come right back into the range. But if this does break down, I think this level is going to go straight through, and then we go towards 23.5. And then who knows? But it is looking very weak. And I've been saying for ages, cryptos are underperforming risk. It's been the case, and I think it will probably continue. Ethereum is a similar story, but it hasn't broken down. Excuse me, from the levels. We have one at 1740, which is the low, and also this high here. So 70-40-50 is very important. Ethereum is kind of maybe closer to some support. Bitcoin, I think, is going straight through. So I would be very careful being long these. So, damn it, sorry. You could try a really small, really tight risk reward long, because where you're wrong. It's very close. Could do that, but really, I think crypto is going to underperform. So I really wouldn't want to get bullish to those in any shape or form at this point. Anyway, so that's what I just wanted to mention regarding cryptos. I think they're interesting.
All righty.
Last couple
of
days.
Thank you very much for that, Stel.
Thank you.
I'm not even charting them. I'm just watching the game there. I know it has some correlations with other stuff, but I'm prefer not to get too much involved in it. Also, yeah, but you never know where you wake up the next day when you have a position in that stuff. Still very much there's enough manipulation in there to throw positions overboard, and you never know where you get done, right?
Yeah, I have friends who have. Sorry, carry on. I'll say later.
I'm not even interested in even getting involved in it.
Yeah. I have friends who have asked me, why'd you like gold and silver instead of, cryptos? Why not do that? They're a risk proxy. They rally more when things go up. Obviously they sell off more. And I said, look, I don't like them because, you buy gold, it can't be 20% down in a day. It just cannot. And neither can it go down to zero. There's no event that will take it down to zero. But there are some, albeit very, very low probability events that can take Bitcoin to zero. And that's what I don't feel comfortable with at all. No. Even if there was a 1% chance of gold going to zero, even if there was a 1% chance, I'd be very worried about it. Because it's a trade that can absolutely break you.
Yeah, absolutely. Alrighty, and that is it for today's show. Thanks everybody for being with us as usual every day, and we'll talk again tomorrow.
Thank you. Just a reminder, I'm not going to be here tomorrow. I'll be back Thursday and Friday as normal.
Okay, mate. See you on Thursday.
Thank you.
Cheers, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.